Okay, BUA Foods. So BUA Foods just reported their half-year 2026 results. So let's look at it. You see that revenue fall by 16.2% year on year. Then another thing is the gross margin expanded. So some of you might be asking, how is it possible that revenue fall, but gross margin expanded? We are getting to that then. It is a shrinking top line with expanding margin. This story is unpacking carefully so that you get, because naturally, if revenue falls, sometimes the margins are supposed to fall, but there are no ones to this. So if this is what we're gonna unpack, so if it is your first time of watching our reading our S analysis, which is broken down into 4 segments, this headline, what happened in terms of the market performance, what we found out behind when digging deep, then the evidence to back up our findings, then what to watch going forward. This side is very as important as every other section. Then for the graphics, is divided into 4: the market price, the income statements, the balance sheet, and the cash flow statement. So these are the 4 stuff we use in our analysis. So let's get into it. So this is the market price of BUA Foods monthly chart. So you can see BUA price is currently at 845. As at the time of recording, it hit a close of high of close to 900 plus, heading to the north of 1,000 before it retraced. So for the hold on a sec. Okay, so let's look at the income. For the income statement, you can see what actually happened there. The turnover, which is the revenue, dropped from over 912 billion naira to now 765 billion naira. So it dropped by 16.2%. But the gross profit increased. Why? Because of the cost of sales dropped. So it's what we call cost shrinking growth. So the cost, the direct cost, shrinked. So it led to the margins eking out some stuff. Then if you look at the middle line side of things, operating profit grew by 12.5%. Then the bottom line, of course, the bottom line also increased. Profit after tax increased by 12.4%. So if you look, they are looking up, or just bear that concept of cost shrinking growth. So the margins looked all true because of the cost was shrinked. So let's look at the balance sheet. So for the balance sheet, you now see that asset grew by over 20.5%. Then the equity also grew. And if you look at the current liquidity ratio, they all improved. Just the return on assets dropped and the return on equity also dropped. So let's look at the free cash flow. After that, we now dive into the facts behind the numbers. Then you see that the free cash flow grew. The free cash flow grew from 85.19 billion in half year 25 to over 146.41 billion. So which is pretty impressive. So fast behind the numbers. So first of all, the free cash flow grew, of course. Then the revenue was overwhelmingly mixed by FX macro, not really operation, because if you check the operation, you see that revenue dropped. So the raw material, what did the heavy lifting of that cost shrinking effect is the raw materials dropped by 33.1%. So, which is whooping significant. Then energy cost also dropped, which is also significant. Then in terms of production, you see that bakery flour dropped. Bakery flour dropped by 94.9 billion. Then even both the sugar category also dropped. Bakery and sugar dropped, which accounted for the total of 147 drop in revenue. But what did the slight offsetting was their pasta. The pasta food grew by over 34.7%. Then there was also a tax incentive. So that is why if you look at their tax side, the tax side, there was a tax incentive of, we call it a pioneer tax incentive, which they are still enjoying. So it shielded them from the normal corporate income tax. So that's why they paid over 7.18% in tax. The free float is still very much small, just 4.72%. The bulk of the shares are being held by Rabo and the BUA Industry Limited. They jointly hold close to 92.63%. So there was no litigation, and they made some provisions, but it was not explained for. So in summary, we can say it is a cost shrinked income, not just because performance was outstanding. So you can read more here. So the question is, where the rubber meets the road is what happens when the cost cannot be shrinked again and you are not making enough revenue. The chicken might actually come home to roast. This is one side. So just digest it so you get it. Catch you on the next one.